Hello and welcome to the Voodoo free video for Monday, August 11th. This is David and we are taking a look at gold. We last looked at gold when we were back around here coming up from May lows. I think mid to late May is when we were looking at this. And we're due for an update. Now, before we dig in, it's important to note that what I'm charting on here is London spot gold prices. It's usually the ticker I'm going to look at, and it's what I was showing you when we were looking at this in May. But because of some of the things going on in gold, what one charts is going to be more of an issue than it typically is. Look, usually I'm going to prefer charting spot to, say, the futures, because the futures have rollover gaps which can distort the patterns that I like to look at. They can make, for example, prices here in August not comparable with swing highs from back here like the all-time high in April. But right now, there's something else going on, something important. And to understand it, you need to know that there are three main market centers for gold, right? There's New York, where it trades on the COMEX. There is London, and there is Switzerland. And the reason this is important is because late last week, the market started to price in a belief that tariffs were going to apply to gold coming in from Europe. And if that belief was true, then U.S. gold prices, right, including those that trade on the New York-based COMEX exchange, should have been priced greater than European market centers by the amount of those tariffs. And so what you saw last week and can still see on the US futures is a jump late in the week. And if you're viewing that on the futures, depending on how your continuous contracts are constructed, you either saw a jump up that came maybe a little below this April all-time high, or maybe even to above the all-time high. Now, if you were looking at futures and things jumped up, they started giving back that additional premium almost immediately, and then the rest of it came out almost entirely here. Right, all of the additional premium, and then you can see that the European spot price has also come back in a little bit today. These are lined up, so today in the futures was even more of that additional premium coming out, plus a decline in gold more generally. So now that we know at least what chart I'm looking at and how it might differ a little bit from a chart that you're looking at, let's talk through some of the patterns, because everything that happened back here in April and May and June and July, that remains relatively similar on all of these charts. And if we remind ourselves what we talked about here in May, after coming down from the all-time high, and I'm still considering this in April to be the all-time high, right? We said, hey, this pullback could be an Elliott wave, A, B, C, three-wave move to the downside if the bounce that we started to see up off of those May lows was going to continue. Meanwhile, if the sell-off continued and broke through this Voodoo tree line, then we could look for some additional downside and the potential that at least an intermediate term top would be in. Meanwhile, if we continued up, particularly if we broke above a trend line connecting this April all-time high with this May swing high, right? If we got above there, that would suggest that the move down was likely counter trend. Now, I'm still sticking with that because it continues to look like the move down from the April high into that May low is going to be one of these, or has unfolded as one of these A, B, C Elliott wave, three wave moves. Now, corrective patterns, Elliott tells us, is either a three wave move like the circled lowercase ABC shown here, or a combination of multiple three wave moves. And there are 5 different possible patterns that are combinations of 5 three wave moves. The one I'm showing here is a triangle. And triangles are in fact composed of 5 three wave moves. We label them A, B, C, D, and E. Certainly this one and this one and this one and this one all look pretty convincingly like counter trend three wave moves. This one down into lows last week, I'm a little less sure about. And for that and a few other reasons, I'm not convinced that this is a triangle, but it certainly looks like a counter trend move. So I want to be long. Once this started looking like a triangle in the Voodoo Mastery Room, we said, let's buy the bottom end of the range. So we bought back here last week. Once we started to head up, we took half off, and we're running the other half with a break-even stop. So even if this comes back down, we're going to make some money on that trade. But overall, I continue to like the idea of remaining long gold, whether you bought it back here in late May or early June, when we started to come back above that trend line we talked about before, right? Or you buy pullbacks in here. If we pull back and hold above last week's low, then I think there's a potential we continue directly up. There's also a possibility that a triangle is ongoing, either as either with this E wave, right, the last three wave move down, still in progress, perhaps to look more convincingly like a three wave move. And so long as we hold that late June low, that is a possibility that it's C, D, E, and only then do we head up. But in any case, unless we break that tree line that we talked about last time we covered gold in May, unless we break that, I'm still favoring the idea of additional upside, minimally to the fire line, or let's say minimally to a new all-time high, but the fire line would be a reasonable upside target. And at that point, I'd be looking to trail up stops more closely, particularly if things, if the pullback from the April high ends as a triangle and has a reasonable triangle shape when we do head higher, I will look at likely some form of a top being put in and leading to at least a pullback, if not a reversal to bearish. So that's it for now. Continuing to look upwards, continuing to see signs looking for an all-time high. As always, the lower end of the range is easier to buy than the upper end, so we may be getting a pullback that will allow for reloading. And I'll see you again next Monday for one of these free video updates. Until then, as always, good trading.